Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Nio stock and Robinhood stock. We will begin by analyzing an article titled, Why Nio stock Raced Higher Recently, and then after we go over their latest news catalysts and how investors are becoming more excited pertaining to this overall stock, we will also talk about their actual price targets. After that, we'll move on to another article titled, Is Nio Worth Betting On Now? So we will be discussing when is the best time to actually invest into this company, if this is a good company to hold for the short term or the long term, and why investors are creating a frenzy around this particular company. Once we analyze that article, we will move on to a very exciting deal that Nio has signed with CNOOC and how this is going to reflect very positively on their future growth and not their immediate growth. So again, this is going to be a slow burning company, but overall, I think Nio is set for profitability probably by the end of 2025 or the beginning of 2026. We will also be going over a Robinhood article where Hood stock, ticker symbol HOOD, has been gaining lately despite the news of them laying off employees. And this is rather odd for a company to have bearish negative news and then actually surge based off of this news. So we're going to be discussing what other stuff could be going on with this company. We'll be going over their latest catalysts, news updates, price targets, price predictions, what analysts think. I'll add my own educated opinion, and we will touch on why Cathie Wood of ARK Invest or ARK Investment Management has been buying up Hood stock lately. And even though Robinhood has laid off employees, it seems that Cathie Wood of ARK Invest is still very bullish on this overall company, and we'll discuss exactly why that is. So for more news updates on Nio stock or Hood stock, also known as Robinhood stock, don't forget to go and annihilate that like button right now, comment your thoughts down below, subscribe if you are new, don't forget to become a member of this channel for as little as 99 cents to support me personally so I can stay here on YouTube, because that's what keeps me here. But if not, don't worry, by subscribing you will receive this for absolutely free if you can't afford 99 cents per month. But with that being said, I say let's jump right into today's stories. Nio is a Chinese electric vehicle company, and their share price has been trending downwards from June 15th all the way until Monday, but recently they actually broke that overall streak, to where shares of Nio surged by around 11.1%, and we will discuss and analyze exactly why that is as I do a Nio stock review. They currently trade at just $9.31 per share, while very bullish analysts believe this company could surge up to $19, and more bearish analysts believe this company is actually only worth around $6. So we'll be comparing and contrasting who is actually right here when it comes to the opinions of experts, analysts, professionals, as well as myself. But first, let's talk about why they have actually surged in their share price, and it's for two main reasons. The first reason, which is highlighted by this article, is due to the World Economic Forum, where it was projected that China's economy will grow at a faster clip during the second half of the year, which is really invigorating investors and Chinese stocks. Now, this overall bullish view of the Chinese economy is benefiting investors because it's not only Nio's share price that is rising right now, but particularly green energy or green solution companies. And that's why some investors are buying Nio due to their focus on clean energy related companies. For instance, a spokesperson from the World Economic Forum said this during his speech about China, and I quote, "We will launch more practical and effective measures in expanding the potential of domestic demand, activating market vitality, promoting coordinated development, accelerating green transition, and promoting high-level opening to the outside world." And essentially, that acceleration in the green transition for China is a huge improvement for electric vehicle companies. So this is going to benefit BYD, Tesla, Nio, XPeng, Li Auto, and many others. However, I'll dissect exactly why I like Nio compared to these other companies, even though BYD and Tesla are my main electric vehicle holdings. So right now, the bull case for Nio looks relatively strong thanks to the overall macroeconomic environment in China improving overall. This should also predict more electric vehicle sales in China, which will benefit Nio greatly. So while we hope that this forecast is accurate, we still, as investors, should take it with a grain of salt and not overhype this company or invest too much, because we still need to practice proper risk management here. Now, the faster economic growth in China is going to be very beneficial not only for Nio, but all green energy companies, electric vehicle companies, and any green transition company located in that area. However, if Nio is unable to secure more customers despite this overall positivity, that is going to be very detrimental for shareholders and their overall share price, even though I am still very bullish on Nio, even though I only have around a 1% allocation to this company, because it is a very hyper-risky stock, not only because it's a foreign stock, but the United States relations with China is very volatile right now, considering that we are moving our manufacturing from China over into India right now. We're in the middle of that process to becoming less dependent on China and Chinese companies for manufacturing. But let's see what this has to do with Nio. So on top of the risks of geopolitical turmoil between the United States and China, China being a foreign company, meaning that you're going to have to invest into a shell company and ADR shares, meaning that you're going to get ADR fees, and the possibility of, even though China increasing in their overall economic output, that if Nio doesn't capitalize on this, their share price could go downwards. Those are the bearish cases for this company. But now let's talk about the fundamentals and the good about this company. First, I think Nio will be able to capitalize on the overall Chinese economy increasing their overall output and GDP. On top of that, let's look at their financial figures. Over the past month, shares of the NIO stock have actually increased, which is very invigorating. Now, I want to look at their future projections regarding their earnings. And like I've mentioned in previous videos, we need to get to the second half of the year because their Q1 earnings report and their Q2 earnings report are going to be rough, which is going to cause the overall share price to decrease in my opinion. However, from the third quarter onwards, I think that's when the company's share price is going to start uptrending aggressively. So let's go over their current quarter expected losses and EPS. They're anticipated to bring in a loss of 36 cents per share, which would indicate a change of a loss or a degradation of 44% from the same quarter from a year ago. And this is not very positive. On top of that, the consensus earnings estimate for the entire fiscal year is a loss of $1.37, representing a year-over-year change of negative 6.2%. Again, that is not very positive, and I think this is going to weigh down the overall share price. On top of that, if we look at their overall revenue, Nio is supposed to bring in $1.35 billion worth of revenue, which would represent a year-over-year change of negative 11.8%. And for the full year, they're anticipated to bring in $8.36 billion, and the year after, $13.11 billion. And that is what I want you to see. Look at the giant leap from $8 billion to $13 billion. In the next fiscal year, we can see a change in the positive side of 15.2%, and then a massive increase to 56.8%, meaning that we need to get past this negativity in the second quarter, and then from the second half of 2023 onwards, the sky is the limit for this overall company. So investors essentially just need to survive during this time and capitalize on the cheaper share price, which is why I only currently have a 1% allocation to this company, because when it drops lower, I'm going to capitalize on the company and buy some more shares. Preferably if it drops around or to $6 to $7. Now, what I do want to say is that when we look at next year, their entire year will only have a loss in regards to their earnings per share of 62 cents, representing a 54.5% increase on the positive side. And then from that point on, it's just going to get more positive, which is why many professionals actually rank this company as a hold rating right now because of its amazing upside potential. So if investors can weather the storm until Q3 of 2023, that's when the company's share price is going to start uptrending. And we've already seen a little taste of the uptrend thanks to their very positive news, where they have announced a partnership with CNOOC, which has increased their overall share price. It was a huge announcement that Nio posted both on Twitter and an official press release regarding their strategic partnership with China National Offshore Oil Corporation, also known as CNOOC. For investors who aren't aware of this, CNOOC is China's third largest oil company. So this is amazing news how they are partnering with an electric vehicle company such as Nio. This strategic partnership between these two massive companies will center around Nio's build-out of their charging and swapping infrastructure. Nio, in my opinion, the reason I personally own it is due to their swapping stations. This is a technology that other electric vehicle makers are not trying to get into right now, and these swapping stations are far superior than charging stations, because at a charging station, you could be sitting there for well over 15 minutes, or at least around 15 minutes to get a charge, when Nio's swapping station will be able to replace your battery in a matter of minutes, which is far quicker. You can literally swap your batteries out way faster than you can charge them, so that's why Nio technologically is a leader in this space. And because time is money and this saves their consumers time, this is going to act as a very positive technological and first mover advantage in regards to Nio. This partnership is going to help Nio build out more infrastructure regarding these swapping stations, so having this partner is going to be very positive for Nio to capitalize and get capital and also increase overall production, make customers more happy, and increase shareholder value. So overall, I would say Nio, as long as you're going to hold on to this company, good news is ahead. However, if you are anticipating that this company is going to become profitable anytime soon, then they are not. Feel free to only invest into this company after 2025 or 2026 once they've proven themselves and become profitable. But if you're willing to take a little bit of a risk, such as I am for this company, feel free to invest anywhere between 1% to 5% into this company, especially from Q3 onwards. Now let's talk about Hood stock, ticker symbol HOOD. And this is regarding the very popular stock trading and cryptocurrency investing platform Robinhood. Robinhood, as many of you know, is a stock trading and cryptocurrency trading platform which recently had massive layoffs for their full-time workforce. Now, despite these layoffs, which is normally detrimental to the company's share price, their share price actually increased, and we'll talk about exactly why that is. The main reason for Robinhood's layoffs is slowing revenues. In May, the company reported less than 11 million monthly active users, and in regards to the overall economy, this seems very transparent because the majority of people who use Robinhood are not experienced, seasoned investors. They are new investors that have no idea what they're doing. And since the economy has been bad lately, investors are just losing money hand over fist, and if you are a new investor and you're not familiar with market cycles, you essentially just quit investing and you lost a lot of money, which means that they are deleting their Robinhood app. Now, a Robinhood spokesperson recently said that we are ensuring operational excellence in how we work together on an ongoing basis. In some cases, this may mean teams make changes based on volume, workload, org design, and more. So essentially he's saying, because we don't have a lot of active users anymore and revenue is down, we can't support this amount of people, which honestly is a good move. Now, despite the overall bearish nature of the move, why is Hood stock increasing? Well, there's two main reasons for this. Year to date, Hood stock has surged by around 20%, which is great news for Robinhood stockholders. And as of right now, the current share price is trading between $9 to $10. While the very positive analysts believe this company could surge to $25, and more bearish negative analysts believe this company could fall as low as $8 per share. On top of that, good news came in the form of them acquiring the credit card startup X1 for $95 million in a cash deal. And this is going to increase Robinhood's overall revenue by offering credit cards and any interest payments that people are going to make once they rack up debt on their overall credit card. So they are diversifying between other revenue streams. On top of that, the reason why Robinhood stock said that the revenue and other financial aspects of their company was down is not only because the economy was down and the market was down, but also due to a cryptocurrency crash, because they allow people to invest into both cryptocurrencies as well as stocks. Now, despite this overall volatile move in the overall share price and stock market, Cathie of ARK Invest has started to buy Hood stock up, and she has done this multiple times, almost buying 1 million shares in one go. At first, she was just nibbling at this overall company until June 23rd, where she almost bought 1 million shares in just one investment. So it seems that Cathie of ARK Invest is very excited about this, even though as of late, many other investors are somewhat ambiguous about the future of this overall company. For me, I would say let's wait a little bit to see what Robinhood stock does, even though it could start trending upwards even more aggressively due to the momentum that's behind the stock. It's been falling for quite a while now, and it seems that it has hit close to a bottom regarding how the most bearish analyst says that the company is worth around $8, and since it's trading between $9 and $10, it seems relatively cheap compared to their overall bullish price targets, which go over $20 per share. So I would love to hear what you think about Robinhood stock as well as Nio stock. For more news updates on Hood stock and Nio stock, don't forget to go and annihilate that like button right now. Comment your thoughts down below. Tell me what you think of Cathie Wood and her recent investments. And with that being said, I will see you in the next YT video.